4/27/2020. I have the daily Dow Jones chart right here, right now. So here's what we're going to do. I'm going to show where the highs were back over here. The highs on 4/17 were 24,264. Now, this particular daily bar that had started up with the gap today, Japan, and a whole bunch of other data, and we have this Dow going ahead and moving straight right up here. This is going to be the key right here. This is going to be 24,108. So that was on 420. And that's going to be the next area of the major resistance. So I would say with the earnings season kicking off this week, and we've traveled all the way up as bear markets have done in the past and have done very well this time, and they have. And we can clearly see that the original highs that we wanted to see is right here at this level. So we're still, this is where the down, we called the reversal here, and then we had the gap down. Okay, we've recovered within, mathematically, each line is $204. So 1, 2, 3, 4, 5. That's 1,000 points from this low. One teeny, 2, 3, 4, 5 of these times a half a delta. One half delta is 204 points. Dot 16. And it's right to the penny. 1, 2, 3, 4, 5. And now that we've done this within this bear market structure and this bear market rally and within the option pits and the different strike prices, bull versus bear raids and whatnot, and now the true test of the Dow is going to come here. Let us look at it from another view. Let's go over here and let's pull this up right here. And you can see that each line, I know it looks condensed and whatnot, so I'll go ahead and blow it up again for you. But I just want to focus on that low and where we're at, and where this is what it looks like from this view, and this is the recovery. This is ascending. The diamonds are popping higher, and they're going up, and they're testing the deltas. And the diamonds were at the high of the daily candle, and you can see a double diamond here with the gap open up. And you're going to watch that top diamond here in the short term of where that reversal and now the recovery is going to be a very crucial point with the earnings. You've got Microsoft, you've got Amazon, you've got Facebook, you've got Apple, you've got Google, you've got all kinds of different earnings that are going to hit the tape this week. But one thing about bear market trading is that you take a look at where you ran up, where you recovered. That's always number one. And the math is definitely coming to a very challenging point. So when we take a look at where the next level is going to be these days, that happened on 3/9, this was on 3/10, and this was on 3/11. And on 3/11, they opened that at 26 or 24,604 on this bar. That was the opening bar. Okay, but we got to get past where we ran out of steam. We recovered, and it's typical. If we didn't have the virus and the financial crisis right now, and we're going into a major earnings season this week, this is typical for them to run stocks up going into the reports. And then, they're going to come out and they're going to say, oh, well, we can't give any guidance, this, that, rah, 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 rah. But what is the true value of the company? And this is part of what Wall Street's going to be looking at. We already know what sectors are going to be challenged. And we know all of that. So what? This is about making a market right now and which way we've gone, where we've recovered on this daily level. And these is what it exactly looks like right here. And then we start dealing with where this gap was. We've already taken out this diamond, and that was a major hurdle on the way up. And that base started right here, right where the top of that diamond was, right there. That's exactly where that ascending base on the recovery right here has taken shape as it has and whatnot. So there's a view of these bars here. There's the gap. There's the top of that diamond. You go all the way back over here, you'll see that ascending base, that diamond right here. This is part of that ascending base in this current recovery going into a major earnings season with a lot of uncertainties, a lot of unknowns and whatnot. I do tell people to be cautious because what happens in these bear market raids is that they trade up in anticipation of all the good things that are happening. Right now, we have a gap up, Bank of Japan. We have worldwide stimuluses kicking into effect. You got the Fed, don't fight the tape. They've been buying up ETFs and stocks. So, but it doesn't matter. This is what we're going to focus on. This is the first hourly, and we've had 1 hour and 30 minutes opening bell in this daily candle, and we have plus 11 minutes. So we've been open 1 hour, 30 minutes, then plus 11 minutes. And there's the top of the diamond at this teeny line right here. So this is the key focus. And the half bar, just to let everybody know, that half bar value is 24,040. So technically, we're right up there right now. And if we do break through it, we can travel up higher. But at some point, you got to know when it's baked into the cake. And I'm just telling people to be very cautious with the major earnings season. We know it's not going to be good. But once again, companies in different sectors are going to be worth different things, and you've traveled a long ways up going into the unknown session of earnings and the stimuluses and the gaps and you know everything that we have seen with this epidemic, the virus. So that hasn't left us. That's still with us. And the tape in the Dow and the earnings season and the repricing of certain equities will have to happen. But there's going to be extremely good ones that are going to be able to buy on the dips. But you have to know where to be. Anyway, Dow Jones, major top coming back into play. There's last week when we started it. Everything's on YouTube. We have it all right there for you to look at. We called the big reversal, then we called the bottom. We've got an ascending recovery. You can see how the diamonds are popping. Look at that. Look at that. We got a triple diamond so far in this hourly or 1 hour and 45. So you got 1 hour and 45 minutes right now. And so we're going to be taking a look if sellers move in. The volume is extremely light. You got 247 Dow points, 90 NASDAQ points, NASDAQ 100, 59.97, S&P fear indicators. That VIX is down to 32. We're going to be talking about that. And the VXN, NASDAQ 100 fear indicators, down 14%. The VIX is down 21%. And we got the Dow popping. And when you're putting a short-term bottom in, coming up to major tops and major walls of resistance. Listen, things are going to have adjustments. The rally that we called for off of the bottoms and the back end filling and then the reversals and then the recoveries within the Dow on the daily chart from the day of the crisis when we called the top before the epidemic even happened. And now this is in play. Be aware that as we travel up, it's going to take higher buyers and higher volume to keep pushing us through the next levels that the Dow Jones will have to see in the coming days in the earnings season. Be advised. It's live. It's an hourly one. You can see where we're at, 24,021. So we're back to that level. So we're up 246 points, 1.04%. We will update everybody later, and we will. And all our traders will be updated as to what the Dow and how the Dow is going to respond to the quarterly earnings season that's kicking off right now. Special preview. People that took the time to watch the opening bell, we are going into an earnings season. You need to be cautious about what you're doing.